All right, welcome back to the New Equity Network show. Michael Yorba, your host, Jared Fabriello, my co-host, and we're talking with Michael Brady, General Manager, Tumbleweed Capital, and Michael Gilbert, Managing Partner of Tumbleweed Capital. All right, Michael Brady, we've talked about the experience. We talked about, in generalities, about the fund, but I'd like to get into some of the details, if we can, a little bit more granular, like who are the borrowers and who are the types of people that invest in Tumbleweed Capital, maybe some risk management issues. And I know Jared's got some questions for you too, but if we can lead us off on some of that. And Michael Gilbert, please chime in anytime you think you've got something to add to the conversation.
Sure, great. So the investors for Tumbleweed Capital are going to be people who are interested in having a real estate diversification in their portfolio without actually being involved hands-on in the real estate transaction. Mm-hmm. So it allows you to have that tangible asset in your portfolio without the experience, knowledge, or the time that's required to go out and find a property, rehab it, flip it yourself, or hold on to rentals, deal with tenants, all the headaches that come with real estate. You're letting the experts take care of that for you, and you're getting the returns.
Okay. All right.
Our borrowers are, real estate professionals. They're people who have experience in this market. They're people who know how to find properties, know how to evaluate them themselves so that they know that they can make money on them. And then they can bring those properties to us, and we can fund them on the deal.
Okay, so the people that come to you to borrow the money for projects, I get that what I'm getting here is they need to show you a history of results and a track record. Is that right, Michael?
That's correct. We typically require the borrower to have flipped at least 3 houses previously, because as we all know, there's all these real estate seminars out there.
Right.
And then you get these newbies out there and they lose their tail on the first deal because they really don't know how to evaluate.
Okay.
And so we want guys that know how to evaluate deals.
All right. Risk management, that's a topic that we touched on a little bit, asking about the fund being safe. But can you guys get a little bit more granular on that, or, drill down into it a little bit?
So risk management for us is really kind of a 3-prong tool. So first, we're going to be looking at properties that we are loaning money on and we know that we have immediate equity in. So the risk is very low on each individual property that's being purchased, because if for some reason the borrower doesn't perform on their loan, mm-hmm. we can foreclose on the property, immediately take it back, and we know that we can sell that property, either if we have to finish the rehab ourselves or sell it to another investor and protect the borrowers or protect the investor's money. The second prong is that the fund itself is aggregate. So each loan that goes out, mm-hmm. every investor in the loan will have a percentage share of that loan that goes out. So the risk is spread out for the investor across all the different loans that we'll write. There won't be one investor writing a loan for one borrower.
Right.
And then third, we will only loan out the cash portion of the purchase price for the property up front. And then as the borrower starts to work on the rehab project, we will do periodic inspections. Those inspections will come with a draw request that allows that borrower to draw down on the remaining balance of the loan that's being written for them. Mm-hmm. And so at any given time, there's only 30% of the rehab value at risk in the property. Everything else is secured by absolute value in the property.
Okay. Jared, do you have any questions from, coming from, an attorney's point of view or say an investor's point of view?
Well, I do have, I guess, a general question about your opinion on the Dallas market here. With oil where it is, it seems like there's maybe some risk in the economy. Do you think that'll flow into real estate? Where do you guys see the market going in the next 6 to 12 months?
I think it's going to continue to grow. If you start getting out into the market and looking just at, and when I say the market, let me define that for a second. We're talking about house flipping. If you look around White Rock Lake, Dallas, Fort Worth, there's a lot of deals out there, but there are a lot of people vying for those properties. I have friends that say they get a postcard or a phone call at least once a week for someone wanting to buy their house. If you look around White Rock Lake, south of downtown, Oak Cliff. Those properties are being bought, and they're scraping dirt. They're not even doing rehabs. They're buying the $300,000 homes, and they're putting $800,000 homes. So the market is going to continue to grow. The reason we don't want to compete with them is builders are now in the space. We have builders calling us going, we need money as well to borrow. And so, and then we're also looking at some other markets like Nashville. There's about 5 or 6 other markets that we want to enter after we really get our feet under us here in the Dallas market.
All right, let's do that. Let's talk about the geographical markets that you're in now and where you're planning to go with this.
So as of right now, we're going to be servicing the Dallas-Fort Worth market. The investors and the borrowers that are here in this marketplace, we can provide that high quality level of customer service to our borrowers that we want to pride ourselves in. Now, as time grows and Tumbleweed grows and we move on, we're looking at other markets, including Alabama, New York, New Jersey, Tennessee, and potentially California down the road.
You know, there's a lot of people that are here in the Dallas-Fort Worth Metroplex that have properties in Colorado. I mean, that's just a real big thing. So is there any plans of working in that part of the world?
We can be very flexible as to the states that we move into, as long as those state regulations allow the type of business that we have.
Okay.
So as an individual borrower comes to us requesting something in another state, we can certainly take a look at those case by case.
All right, so you're open to other states that you haven't chosen yet. It just depends on the opportunity, the experience, and the that's coming to you, right?
That's absolutely correct.
Okay. The loan term and the loan amounts. I mean, so I'm sure somebody's wondering, well, is there a cap on this, and are there terms? Because you guys are writing your own checks, so you're calling the shots.
That's
there.
exactly right. So our minimum loan will be $50,000. We haven't specifically come up with a maximum yet, and I don't know that we will. As a general rule, if the property qualifies and we feel like it's a secure investment for our investors, we'll probably be interested in writing that loan.
You know, one of the caveats that Mike and I have kind of talked about is staying within a parameter that we're comfortable with. We don't want the entire fund going to one borrower, potentially a multifamily type deal.
Right.
But we want homes that are going to turn quickly, and that's usually $125,000 to $300,000 homes usually move very quickly. So that's what we're going to probably spend 90 to 95% of our time on. However, we already have deals that are coming to us. We have a portfolio deal of 27 properties, but that's to one borrower, and we're not comfortable doing that just yet.
Okay. The borrowers, when they come to you, do they need to be here in our local area, or can they be people that are from out of state that are doing business here? Is there any restrictions on that?
Not as far as actual restrictions. We evaluate each individual deal, and it depends on whether or not we feel comfortable with the underwriting on it. So anyone from anywhere can apply to be a borrower on a property, and if it passes through underwriting, we're happy to work with them.
Okay. All right. Jared, any other questions from your end about what they're doing?
Well, I would maybe like to hear a little bit about what some of the owners that you guys are looking for can do to maybe help make their property more appealable so that you could lend money to them, or maybe a good way to get the best way to get in touch with you guys to do that.
So really a borrower is not going to be doing anything to the property before they come talk to us. The more distressed the property, probably the more likely we are to take a look at it. We really want properties that have been neglected, properties that just do not qualify for somebody to come live in them.
So what is the process? Do they just walk into your office, call you guys? I mean, is there a process that you have set up right now to kind of weed out the good ones from the bad ones?
So a borrower will come to us, and through our third-party management company, which is called Property Recycling Group, the borrower will apply to become a borrower. So they'll get pre-qualified by us. And once those borrowers are pre-qualified, they can bring each individual project to us. It'll be pictures. It'll be a rehab cost. We'll look at comps. We'll look at all the different parameters that are needed to evaluate that property both now and after rehab. and if everything passes snuff, so to speak, we'll loan up to 80% of that, again, that after repaired value. So the total retail value of the property. So for example, if a house is worth $200,000 after it's repaired, someone is buying the house for $100,000 and it needs $30,000 in repairs, that house is well within the scope of what we would loan on.
That's great. And then it sounds like they're negotiating as a cash buyer, which has got to help them in their process of buying.
Absolutely. And the properties that these people are looking at wouldn't qualify for anything other than a cash purchase to begin with. So a mortgage company's not going to write a loan on this property.
All right, gentlemen, we've got to close the interview for now, but I appreciate both of you coming in. Wish you all the success in your new fund, and before we go, contact information for the audience members to reach out to you.
So our investors can take a look at us at tumbleweedcap.com. Potential borrowers can come look for us at propertyrecycle.com, and then you can reach us on the telephone at 817-381-6203. One more time, that's 817-381-6203.
Gentlemen, thanks for being on the show.
Thanks for having me, Michael.
My pleasure. All right, that was Michael Brady, General Manager, and Michael Gilbert, Managing Partner, Tumbleweed Capital. All right, we'll be right back on the other side of this break with David Dugan, CEO, Viral Networks. We're going to talk about how you get the word out with your company with one of the best guys in the country. All right, you've been listening to Jared Fabriello, Michael Yorba on the New Equity Network Show. We'll be right back.